Okay, let's take a look at how to complete this inventory record. So if we use, first of all, the first method, first in, first out, the upper table tells you that there's 4 transactions that happened in the company. 3 of them relates to purchase transaction, 1 of them is selling. Okay, so under first in, first out, the theory is first purchases entries, we assume customer is purchasing from earlier transactions first and then later ones. So if we're selling 4 gallons of milk to a customer, from all these 3 purchase transactions, where do you choose from first? $2 first for 1 gallon, and then you have $2 from the second, 2 more gallons from the second transaction. Since you're selling 4 gallons, you have an additional 1 from this last transaction. So meaning at the end you still have 1 gallon left at the recent cost. But all the earlier ones, you already sell it out to customer on November 14th when you sell the 4 gallons. You'll be choosing this first, and then another one from the last transaction. Okay, so the record here, the table shows is from top to bottom because the slide doesn't have enough space. So the first 3 transactions basically is all related to purchases. Okay, November 2nd, you have the original, you have the first purchase entry. November 6th, you have the second purchase entry. And the blue shaded ones, the blue shaded is total inventory on hand. Okay, total inventory on hand basically just accumulates those 2. 1 gallon at $2, 2 gallons at $2.10. Okay, now following up, you purchase an additional transaction, purchase an additional batch of inventory on November 13th. So again, the blue shaded ones, inventory on hand, you will have 3 transactions listed together in a column. Okay, blue ones is total inventory. Now when it reaches this point, the following transaction, the last one is selling 4 gallons. So selling 4 gallons, this part here is cost of goods sold, the middle part of the table. Cost of goods sold, you will be using 1 at $2, 2 at $2.10, and the last one at $2.20. Okay, so this is the total cost of goods sold in the middle. Okay, the first 2 lines, the first 3 yellow lines here goes into purchase transactions, first 3. Blue one, the right side, inventory on hand. Second blue shaded column, second blue shaded row, also inventory on hand. Okay, this part here tells you sold, basically is cost of goods sold expense. Okay, you're selling 4 of them and you're choosing from first, second, and the last one only 1. So meaning at the end, ending inventory, you'll only have this at the end. The balance line at the end, ending balance, right-hand side, you'll put down 1 gallon at $2.20. So this is the total ending inventory. Yes. At the end, after all 4 transactions, there's only 1 gallon left. Okay? So basically, you will see the balance, the blue one here, under November 6th, the right-hand side column, you will squeeze those 2 transactions together on ending inventory. And these 3, you will see under November 13th, the right-hand side ending inventory. You have 3 purchase transactions altogether up to that point. Okay, but after November 14th, the middle part, you sold out 4 gallons. So then at the end, you only have 1 gallon left. Okay, so total inventory balance will be $2.20 at the end of FIFO. Total cost of goods sold will be how much? Total cost of goods sold, you sold 1 gallon at $2. The inventory, 2 gallons at $2.10, 1 gallon at $2.20. So you would add up 2, 420, 220. Altogether you have $8.40 for FIFO cost of goods sold. Okay, so ending balance, you see cost of goods sold expense, 840. Ending inventory that's in the warehouse in your company, 220. Okay, so total cost available for sale altogether is 1060. This is just additional information. You don't have to fill this out anywhere. Okay, but you will see these two at the last line, ending balance. This is for cost of goods sold expense. This is for ending inventory. Okay, let's move on to LIFO. LIFO, the first purchase transaction, again, is the same. Second transaction, you add in November 6th, also purchased 2 gallons, 210. So first two, again, appears here, purchases, the first two yellow rows here, and then the blue shaded one, ending inventory after this transaction. November 6th, you will see ending inventory on the right side, squeezing those two lines, transactions. Okay, November 13th, there's an additional purchase transaction, so you add that line to purchase column, and then the right side, ending inventory, you add another transaction. So up to this point, the total ending inventory, you have 3 different batches of transactions of milk. Okay, now again, when it reaches selling 4 gallons, since this is last in, first out, you'll be choosing from the latest transaction first, then to the middle one, and then the last is the upper one. But since we're only selling 4 gallons, so 2 will be chosen from recent, 2 from the middle transaction. Okay, so for cost of goods sold, this goes into the middle column. Cost of goods sold, you'll be choosing 2 by the latest cost, 2 by the recent cost. 2 by the recent cost, 2 by the middle transaction, 210. Okay, so this is the total cost of goods sold expense, 860 under LIFO. So on the last line, the balance for cost of goods sold expense, you have this, adding the 2 transactions up. So this is the part of cost of goods sold, and ending inventory will be the oldest cost. The 1 gallon that you have left, we will assume that is from the oldest batch, so it will be $2. So again, total cost available per sale is 1060. We're just trying to divide up what cost belongs to cost of goods sold, what is the cost of ending inventory. Cost of goods sold is basically these 2 numbers. Add them up. Okay, so this middle part here is sold 4 gallons. This goes into the middle column, cost of goods sold. Now this record here is also on Blackboard. This inventory record you can also find it under course documents, Blackboard. Want to do the practice again, or this weekend there's homework on this also, similar to this record. Okay, it's just you'll be doing it on my lab. But if you do want to do another practice again, you can download it from Blackboard. Okay, any questions so far? I know this may seem a little confusing because it's not the same as what you have on hand, right? So any questions on understanding the numbers? Basically, all the yellow ones, November 2nd, 6th, 13, goes under purchases. Blue shaded ones, the first 2 blue shaded goes under ending inventory after purchases. You're just accumulating what you have in the warehouse. Okay, this part here, when it comes to selling, that's the part we apply LIFO, FIFO, that goes into middle, cost of goods sold expense. And then ending balance, you have 1 ending inventory. So at the end of this, the very last line, ending balance, you see 1 appear at $2, okay, for ending inventory. All right, now the last one here for average cost. Again, average cost, the key point when we want to average them out. Every time there's a new purchase transaction, you'll have to do this average process again. Okay, so beginning transaction, you have November 2nd, second transaction, November 6th. We want to find an average cost right after this second transaction. So you don't know when you'll be selling the item to customer. Even though this problem gives you all the transactions, you know after the fact that we only sell it after 3 transactions. But when it's at the time point November 6th, you don't know, probably tomorrow you'll be selling a few gallons of milk. So you always average out the cost every time there's a new purchase transaction. Okay, so this part here, we added the total cost for these, which is $6.20, divided by, so far up to November 6th, there's only 3 gallons of milk. Okay, so total up $6.20 divided by 3. Unit cost is 2.0667. It can go on. You can round it up to 2.06 or 2.067 or 2.07, either way. Okay, so this part here is the average cost. Again, blue shaded one goes into ending inventory. Okay, the right column you see 3. Unit cost 2.0667. Now, next transaction is also a purchase transaction. So we average out, find a new unit cost again. So new purchase transaction, we have 2 more gallons at $2.20. The total cost additional to what's there above is $4.40. So you'll be adding $6.20 plus $4.40, then total divided by 5 gallons after this purchase transaction. Okay, again, every time there's a new purchase transaction, we find a new average cost. And that will be used when we start selling these gallons of milk, we'll be using that average cost, the recent one. Okay, so the new cost here is $2.12 after November 13th purchase transaction.
That's only when you purchase. How about if you sell it at the inventory? Do you calculate the average cost?
So when we sell it, which is the following transaction, right? When we start selling it, we'll be using the recent new average cost, $2.12. So if we sell something in the middle between November 6th and 13th, we'll be using 2.07. Okay, so before this transaction, this was the average cost. If we sell 1 gallon immediately tomorrow after this, November 7th, then we'll be using 2.07. So we only average it out whenever there's new purchase transaction, and then when we sell it, we just use what we calculated earlier. Okay? So this case here, we sell 4 gallons at this cost because we didn't make any sales transaction between those 2 dates. Okay, so this is the latest average cost that we got. We'll be using this when we sell it. Okay? Okay, and this cost would also be used for ending inventory. So average cost, the key point is whether you can get a new average cost. Then when it comes to sales, you basically just use that number, and you also use that number for ending inventory. So the unit cost, you just use the unit cost times the units that you're selling to customer, or times ending inventory. That would be the total ending cost or total cost of goods sold. Okay, so this line here, 212 times 4 units, 848 will be the total cost of goods sold, and then 212 will be ending inventory level. So these two again, cost of goods sold, cost of goods available for sale is also $10.60. It's exactly the same regardless of the methods that you use. So if there's following up transactions after this, if we're selling that 1 gallon out, then we'll be using the 212. But if we're making new purchases of different gallons of milk in the next month, then whenever we make new purchase transaction, you'll be averaging out the cost again. So So using the total cost of new inventory plus what's left in the warehouse, then divided by the new numbers of gallons. So you'll find a new average cost every time there's a new purchase transaction. Any questions?